Strategies for trading with inflation data. How to anticipate market movements. Inflation data is one of the most closely watched economic indicators in global financial markets. It influences central bank policies, interest rates, and ultimately the movement of major currency pairs, stocks, bonds, and commodities. As a trader, understanding how to interpret and react to inflation releases, such as the US, CPI, or Eurozone HICP, can provide a competitive edge. First key inflation indicators to watch: Consumer Price Index, CPI. Measures the average change in prices paid by consumers. A higher than expected CPI can signal rising inflation. Producer Price Index, PPI. Tracks price changes at the producer level, often a leading indicator for CPI. Core inflation. Excludes volatile food and energy prices, offering a clearer view of long-term inflation trends. 2. Anticipating market reactions. Forex markets. Inflation that exceeds forecasts often leads to currency strength as it raises expectations of tighter monetary policy. Lower than expected inflation can lead to currency weakness as rate hikes may be delayed. B. Equities. High inflation may cause stock market pullbacks, especially in growth sectors like tech. Value and commodity-linked stocks may benefit in inflationary environments. C. Bonds. Rising inflation typically pushes bond yields higher and prices lower. 3. Practical trading strategies, EA. Watch forecast versus actual. Market reactions are based on surprises. If inflation is significantly above or below expectations, sharp moves in currency pairs like EUR/USD or GBP/USD can occur. B. Trade short-term volatility. Inflation reports can cause temporary spikes. Use tight risk controls and short-term setups to capture fast moves. C. Use inflation hedges. Commodities like gold and oil often rise with inflation fears. Consider diversifying with these assets. D. Monitor central banks. Pay close attention to commentary from the Fed, ECB, or BOE after inflation prints. They often signal future rate decisions. Generally, trading around inflation data requires preparation, a clear understanding of macroeconomic dynamics, and disciplined risk management. By staying informed and adaptive, traders can anticipate and take advantage of the market moves that follow key inflation releases.